Okay guys, so in this video we're going to be covering the repurchase price triangle, right? So the repurchase price triangle, right? So how do we deal with the repurchase? Like, how is it like, right? So this triangle is like this. We have the shape of a triangle here, right? So the top apex is what? The total buyback price, right? And then on the bottom left we have the what? The average price, right? And then the bottom right we have what? Above the average price. Ne? So the total price is the price in which those shares were bought at, right? And then if they say those shares were bought at an average price of this and this and that, that amount goes to where? That price goes to the ordinary share capital load. And when they say the shares were bought above the average price, it means that price or that value of shares, it goes where? It goes to the retained income. So this one goes to the what? Cash flow statement under what? uh, Financing activities, right? Yeah, it goes under what? Financing activities, right? So here it goes to where? Retained income. And then average price goes to where? Ordinary share capital, right? So what do they mean? Like, what do I mean when I'm saying such things, right, guys? So let's say, for instance, right, they say that maybe let's say at the beginning of the year, they issued 200,000 shares at what? 2 rents, right? And then during the year they issued, maybe let's say during they issued what? 20,000 shares at what? At maybe let's say 4 rents, right? And then we did what? We repurchased shares. Right? So we repurchased shares at what? At maybe let's say 2,000, right? Now in this case, guys, remember, and they say do your what? Your ordinary share capital, right? So my ordinary share capital is gonna be like this, gonna look like this, right? So here we have what is known as the number of shares, and then here we have what is known as the amount, right? So guys, in this case, let's say they say prepare the ordinary share capital, right? So here I have 200,000 shares at the beginning at what? 2 rand, right? And then here I have issued 20,000 shares at what? 4 rands. And then here I have repurchased. Remember, repurchase shares reduce the value of the issued shares, so we're going to minus them here as to what? 2,000, right? Now in this case we don't know at what price were these shares issued, right? Meaning, remember, when we are at ordinary share capital we have to look for the what? Average price. Now how do you get your what? Your average price? So you're going to get your average price by doing what? You have to look for the what? The amount here, right? So you're gonna say 200,000 multiplied by 2. So you're gonna say 200,000 multiplied by 2 rands, which is what? 400,000. And then 20,000 multiplied by 4 rands, which is what? 80,000. Now how do you get your what? How do you get your average price? So in this case, guys, there are many ways in which they can try to trick you in terms of getting the average price, right? So in this case, they have, like, we're looking for the average price given that we have these two information. Now how are you going to get your average price? You're gonna say these two amounts divide by these two amounts, you're gonna get your average price, right? So for example, you're going to say what, 400,000, so 480,000, right? Meaning this amount plus this amount divide by what, 220,000. Therefore that is my what, average price. So I'm gonna say 480,000 divided by what, 220,000. So therefore, uh 2,18 is my what, sorry, my average price. So I'm gonna say 2,18 is my average price. So you're going to say 2000 multiplied by 2,18. Therefore negative 4,360 is my what, repurchase price, right? Like the value of the repurchase shares. So therefore we have what, the total number of shares at the end of the year. Guys, this is the what, the first scenario in which you are supposed to complete your what, your ordinary share capital, right? Meaning, in order for you to get your repurchase price, they'll give you what, they'll give you opening shares and issued shares, and as well as their price to get. So therefore you say this amount, these two amount divided by these. This is the first scenario, guys, in which they can test you. Now let me give you another scenario in which they can try to test this type of question, right? Mm, so that was the first scenario, right? So our second scenario is this. So you can say that maybe let's say the beginning of the year we issued, maybe let's say at the beginning of the year we issued 200,000 shares again. By the way, this is the second scenario. We issued 200,000 shares at what? At 3 rands. Ne? And then during the year, we issued 20,000 shares, 1,000 shares, but they did not give us the what? The share price, right? So they did not give us the share price. This means that in this case, the first scenario is not gonna work, because the only way you find your average price using the first scenario is that you're given shares at the beginning with price, shares issued during the year with their price. So in this case, we don't have the price. So therefore, the first scenario does not work. Meaning that's where the second scenario applies. And they say that also during the year, we did what? We repurchased. We repurchased shares, right? At what? At the rands above the average price. So in this case, shares were repurchased at the rands above the average price, right? Meaning this is the above, meaning here. So therefore, the value, let's say what is the value of the shares? Maybe let's say 30,000 shares. So in this case, this 30,000 shares multiplied by the rand are going to go where? Are going to get to our retained income as part of what? Repurchase shares, right? So in this case, guys, we're also asked to complete our what? We're also asked to complete our ordinary share capital note. Ne? So we have shares, we have amount. So at the beginning of the year, how many shares did we have? 200,000 shares, right? At what? 3 rands, right? During the year, they issued what? 20,000 shares. We don't know the price. Meaning, if we don't know the issued price, there will be a what? A balancing fee, right? There will be a what? A balancing fee. And then we did what? We repurchased shares at what? 3,000, but above the average price. Meaning that's not our average price. We have to look for average price using another method now. Now in this case, maybe let's say you say 20,000 plus this minus this, you get the value of the shares at the end of the year. So you're gonna say 200,000 plus 20,000 minus 3,000. You're getting what? Uh, 217,000, right? Meaning in this case, let's say maybe in the scenario they'll tell you that maybe let's say from the, so with this scenario, guys, now from maybe let's say your trial balance, they'll tell you that the value of the amount of our shares at the end of the year is gonna be maybe let's say um 2 million. Yeah. So in this for scenario two, guys, you have to have these two amounts on your ordinary share capital note. You have to have these two amounts on your what ordinary share capital note. Right now, guys, in this case, you're going to say what your average price. You're gonna calculate it using what you're gonna say the average price. You're going to say 2 million now divide by what 217,000. So therefore, that will be your average price. So 2 million divided by what 217,000. So therefore, our average price is what now 9,22. So our average price is now 9,22. Now, guys, in this case, guys, please try to find the difference between scenario 1 and scenario 2. So guys, with scenario 1, always you calculate the average price using what the shares here and these two amounts, right? If you have these two amounts here and these two shares here, you're going to do what you're gonna say this amount divided by this, you're getting the average price, right? But in this case, they're saying what? They're saying that shares are repurchased above the average price. If they say above the average price, now you do what? You focus down here. You have to have this amount and this amount. So you're gonna say this amount divided by this, you're getting your average price now. So therefore, you're gonna say 30,000 multiplied by 9,22. 30,000 multiplied by 9,22. So therefore, that will be your what? Negative 27,660. Right now, what is our shares at the beginning of the year? 200,000 multiplied by 3. So we're getting what? We're getting our 600,000. Right now, how do you get the value of this? You're gonna say this plus this minus this. So we're gonna say 2 million minus 27660, I know, plus 27660 minus 600,000. I'm getting what? 1,427,660. So in this case, we've completed our ordinary share capital. This is scenario 2, by the way, right? Now in this case, guys, this comes to what this is what I was saying. On average price, we're always looking for the average price when you're using when you're calculating our repurchase shares, right? Now in this case, the above the average above price, meaning this one, is gonna go to our retained income. So our retained income, I'm gonna say 3,000 multiplied by what? Rent. That's gonna go to the what? Retained income. But what about the cash flow statement? So the cash flow statement is gonna be like this, guys. Under financing activities, right? So you're going to say, okay, so in this case, I'm gonna say my okay total buyback is equals to uh, average price plus um, the above the average, right? So in this case, what am I gonna say? I'm gonna say my average price in this case is what? 9,22. So my average price is 9,22 plus what is my above price? The rent. So in this case, my total buyback is gonna be what? It's gonna be, let me say 9, so it's gonna be so it's gonna be 12,22. So my uh repurchase shares under financing activities, I'm gonna say this price multiplied by 3,000. That, guys, so please don't forget these formulas, guys, because they're very much important. Make sure you watch the whole of this video, because there are certain important things that you might get out of this video, so now let me give you guys the third scenario in which they can test you, right? So the third scenario is gonna look like this when you're completing your ordinary share capital, right? So they can do what? Let me see. Yeah, they can change somewhere here. Yeah, the information can still be like this, né? And then here they can say, né? Shares are repurchased, né? At maybe let's say 12,22, né? If they say if they just say shares are repurchased at this price, it means they're talking about the buyback price. You see, so they're saying that shares are repurchased at what 12 rand, 22. This means that is the what is the total buyback, meaning going to the cash flow. This one, and then and they say above the average price. Ne? Shares repurchased at 12,22 above the average price at how much of 3 rands. Now, in this case, how are you going to calculate your what? Your average price. Your average price, you're going to calculate it by saying what? 12,22 minus 3 rands. Therefore, you're going to get your what? Your average price. This is scenario 3, guys. Always. This is scenario 3. So, in this case, guys, I'll try to look for questions and answer, maybe let's say using the following information that I've explained here. So please, guys, don't forget to comment on the video, the chapter that you're struggling with, or the concept that I did not share, right? So yeah, and please don't forget to subscribe, guys, comment and like. Thank you.